weak ones. I'm interested in the highest quality merchandise for my model portfolio. I do not average down. In fact, when I buy a stock and I want to add to it, I typically will do it if it is going up in price. So counterintuitive, but I don't average down, I average up in price. In terms of this market, I'm continuing to tread very cautiously. I'm really not seeing enough compelling technical setups out there to get overly excited. There's a good crop of fundamentally strong companies showing good top line and bottom line growth in recent quarters. No shortage of companies out there with strong balance sheets, big cash positions, all that good stuff. But in terms of technical setups that could yield substantial price gains from here, not seeing a whole lot. So doesn't mean I'm bearish on this market, but it just means that I'm really in no rush to add several stocks to my model portfolio if I don't feel the chances are good for me to make money in these names. All right, turning to today's market, 50 minutes left to go in Thursday's session. Let's take a look and see where we're at. We are day 3 of a rally attempt for the market here. So this is a good thing. Day 1 of the rally attempt was on Tuesday. Wednesday was day 2. Today is day 3. So starting tomorrow, really looking for a sign of strength by at least one of the major averages, preferably all 3, similar to the type of action that we saw in the market on Tuesday, where we had a big increase in trading volume. We had nice percentage gains, but that was only the first day of a rally attempt on Tuesday. So starting tomorrow, maybe sometime next week, Monday, Tuesday, Wednesday, if we can get some follow through here, it'll make me feel comfortable that this rally could have some near-term strength. But bottom line is I just don't have enough information yet to make me think that we are headed meaningfully higher from here. That could change within a day or two, maybe a little bit longer, so we'll see. But I'm sure everybody's waiting for some good profit opportunities. We'll keep our fingers crossed and see how it goes. But right now, we have the Dow up 132 points, 1.2% to 11,072. The NASDAQ up 36.5 points, 1.5% to 2497. That's got to be close to a session high. S&P 500 also up near a session high, up 15.5 points, 1.35% to 1159. Taking a look at a chart of the S&P 500, you can see the benchmark index is still sitting underneath its 50-day moving average here. This could turn out to be a pretty significant resistance level. It may not. What we know is that it will take some good volume to get through the 50-day moving average. We'll see if the S&P 500 can do it. Let's go ahead and move over to the NASDAQ. And again, if you want to look at these charts along with me, just tune in to Channel 1, Tiger TV, right on the homepage of TFNN.com. Here's a look at the composite. Mentioned that the tech index is all the way up near its session high. Day 3 of a rally attempt for this index as well. It's really day 3 of a rally attempt for all the indexes. You got the big ones, the Dow, the NASDAQ, the S&P 500. Also day 3 of a rally attempt for the NYSE composite and your small cap indices as well. The Russell 2000, S&P small cap 600. See, the NASDAQ is also underneath its 50-day moving average. This has been a pretty good resistance level for the NASDAQ as well. So hopefully, what we need, let's face it, we need a good jobs report tomorrow. The way the market is trading, I have to say, it's trading like we're going to see a better than expected number. Right now, the estimate is for payroll growth of 60,000. with the unemployment rate holding steady at 9.1%. Remember, yesterday we had the ADP report that said private employers added 91,000 jobs in September. That was much higher than the estimate of, say, 50 to 60,000. But does good news here mean that we can expect good news tomorrow? And that is a no, because it's hard to find a correlation between the two. Remember, last month, or I should say in August, ADP said private employers added 89,000 jobs. There was a lot of optimism that that would mean good news in the jobs report last month that followed, but that was the jobs report where the Labor Department said 0 jobs were created. So I think the way that the market's been trading in recent days. It's it's still not clear to me that a lot of money is coming in from the sidelines from institutional investors, but there clearly is some optimism about the jobs report tomorrow, and that we could indeed see a better than expected number. So let's hope for a 100,000 plus print. That may be overly optimistic, but I think if we do see a number like that, the market will like that, and hopefully we head higher. Saw a tweet earlier today. By the way, folks, I don't mention this very often, but I am on Twitter, and I occasionally tweet things about the market or whatever, but a friend of mine on Twitter, Mike Santolo, over at the Cabot Market Letter, put out a tweet just recently. He noted that with this is about 2 hours left to go in the session today, there were a total of 7 new highs combined on the New York Stock Exchange, NASDAQ, and Amex combined. Okay, so that's, when you're in 3 days into a rally attempt and you're looking for stocks setting up, you'd expect to see that new high list a little bit higher than 7 stocks. So that's a pretty paltry number. On the other hand, yesterday we had the latest Investors Intelligence survey that came out. My friends over at Investors Business Daily, they published that in the paper in their psychological market indicators area in the B section of the newspaper. But the survey results of investment newsletter writers was pretty interesting. Bears rose to 45.2%. The last time bears were at this level, the S&P was pretty much doubling in value. Bulls dropped to 34.4%. That was the lowest level since August 2010. Remember what happened in August 2010? We were right at a market bottom, and you had a good 30% pop in the S&P 500 over the next 5-6 months or so. So the latest reading yesterday from the Investors Intelligence Survey certainly should give the bulls reason to feel pretty good. But like I said, at this point, it's about looking for some follow-through in the market. Hopefully it comes tomorrow. It may take a few more days to come, and frankly, it might not ever come either. So we have to be prepared for both scenarios. Earlier today, economic data, weekly jobless claims rose to 401,000. That was pretty much in line with expectations. Also, many of the nation's retailers reported solid same-store sales results for September. And also the European Central Bank left interest rates unchanged at 1.5%, but also said they would introduce a 12-month loan facility for European banks. So even though this market tends to be dictated by headlines over in Europe on a daily basis, the headline flow over there, I don't know if it's just me, but it does seem to be getting better, and that has provided a lift for the U.S. markets. How about the average rate on the 30-year fixed mortgage? Fell below 4% this week, averaging 3.94% to notch another record. That's according to Freddie Mac's weekly survey of conforming mortgage rates. Mentioned the same-store sales data by the nation's retailers. I mean, we saw some pretty good numbers today. Let's make no mistake about it. Call a spade here. The numbers were very, very good, better than expected. Thomson Reuters tracks 23 retailers. They reported a 5.1% rise in same-store sales in September. That beat expectations for a 4.6% rise. Let's take a look at some of the retail stocks that reported better than expected same-store sales, starting with Nordstrom. I did a piece on Nordstrom earlier this week on realmoney.com, and this is a retailer that really is firing on all cylinders. But it's a stock that I do not own, but I've been watching because it was in a pretty decent base here, but you really have to call its price action today very disappointing. It's underperforming the market, down about 0.8% to 47.84. Shares tried to break out over a swing point of 49.25. That was this area right in here. It hit an intraday high of 49.84, but you can see it's trading in the bottom third of its trading range today. So disappointing price action for Nordstrom. This is a company that has made it a habit of reporting excellent same-store sales growth. This time around, same-store sales were up 10.7%. That was pretty much double expectations. So disappointing day for Nordstrom longs. Let's move on and take a look at Saks. That's ticker SKS on the New York Stock Exchange. Same-store sales growth at Saks came in at 9.3% compared to a year ago. Much different-looking chart than Nordstrom's. Saks is still looks to be a bit of a laggard here, a stock that I'm not sure is going to provide meaningful leadership in the retail sector if retail stocks continue to show signs of life. But shares of Saks having a good day today, up 4.1% to $9.31. Moving on, take a look at limited brands. Good sales numbers here as well. Limited brands, of course, we're talking about Victoria's Secret, Bath and Body Works, working on a 3-day winning streak here. Recently bounced off its 50-day moving average. Shares mostly unchanged. Again, a bit disappointing. Only up about 6 cents to $40.34. Same-store sales at limited brands up 11% year over year. Still a ways away from a swing point of 42.82 is limited brands. You're listening to Breakout Investing on TFNN. Stick with us, folks.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the frontoftfnn.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. Going over some retail same-store sales data released earlier today. The numbers were quite good, seeing sort of a mixed bag of performance in some retail names. One of my favorite charts in the sector right now would be Ross Stores, ticker ROST on the NASDAQ. Let's move over and take a look at Ross Stores, and good base setting up here. The stock has been consolidating gains for quite some time, but it could be on the verge of a nice base breakout. The company reported a 5% increase in same-store sales growth for the month of September. Also raised their third quarter earnings guidance. So the swing point that you're looking at in Ross Stores would be $82.98. That would be its high right in this area here. So stock hit an intraday high of 82.04. It is now pretty much in the middle of its range. So despite pretty heavy volume in the stock today, it is not up near a session high, which you normally would like to see. But a good day nonetheless. The stock is up about 2.9% to $80.48. $80.48 for Ross Stores. All right, let's move on and talk about Apple. Obviously, sad news, the passing of Apple CEO Steve Jobs, just a individual that certainly means a lot to Apple. Probably one of my favorite quotes from Steve Jobs. You know, these visionary CEOs like Steve Jobs, they're known for coming up with these quotes that are just brilliant. But I remember back in the early 80s when he was trying to lure John Scully, who at the time was the CEO of PepsiCo. And he asked John Scully the question, do you want to make sugar water the rest of your life, or do you want to come with me and change the world? And I just thought it was just such a great quote. He had the confidence that he was going to be able to do it, and John Scully did take that job. But a great quote from Steve Jobs back then. Of course, earlier this week, day before yesterday, the company unveiled the iPhone 4S with a faster processor. It will ship in the U.S. on October 14th. The phone also has new mobile software that can sync content wirelessly. Taking a look at Apple, I mean, this is a stock, when you look at its chart. Let me just go ahead and grab another chart here for Apple. Stock is down near its session low. It hit an intraday high of 384.78. Some saying a lot of the news of Jobs passing had already been priced into the stock. That may be true. As you can see, it has corrected in price sharply over the past 2 weeks or so. But the stock is now down about 0.7% to 375.67. Apple recently enjoyed a nice bounce off its 200-day moving average. I wrote a piece earlier today at Real Money saying, you know, obviously there's a lot to like about Steve Jobs as a CEO. The stock, not so much right now. And I just think that the company's going to have a lot of challenges at this point. They've been able to handle competition in the past, but I think competition is only going to get tougher as you know, life goes on for Apple. They have been a tremendous innovator. They've made a lot of money with the iPad, the iPhone. The iPad has a market share of almost 75%. the iPhone in terms of the smartphone market, about 25% share. But you got to remember, Amazon just announced the Kindle Fire, its new low-priced tablet computer. I think that has a chance of taking share for Apple. And I'm just wary of the stock here. I'm not really interested in owning it, even though it does have a lot of qualities I like to see in a growth stock. It is up about 250%, the stock, since the start of the bull market in March 2009. So I'm just a little wary of the stock here, and I'm really not interested in owning it. I think that Tim Cook is going to be a great CEO, and there are other people there that are certainly capable, and I'm sure Steve Jobs left a very clear blueprint for the company about where he sees it going in the next 10, 15 years. But I think the stock is vulnerable here. But again, to its credit, it did firm up recently at its 200-day moving average. But sellers are still on the stock today, again, down about 0.7% to 375.67. Quick check on oil, recently trading around $82.26 a barrel, up $2.58. That's good for a 3.25% gain. And gold up 0.7% to $16.53.20 an ounce. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. I didn't mention the volume in the markets today. Let's just take a look and see where we're at with about 30 minutes left to go in Thursday's session. We have the Dow up 114 points, just over 1% to 11,054. The NASDAQ up almost 31 points, 1.25% to 2491, and the S&P 500 up nearly 14 points, 1.2% to 1157. Volume on the New York Stock Exchange yesterday, slightly below average at 1.19 billion shares. Looks like volume on the New York Stock Exchange today on pace to come in about 10% below Wednesday's level. NASDAQ volume yesterday, about average at 2.4 billion shares. NASDAQ volume today is tracking about 10% lower than Wednesday's level. But, again, day 3 of a rally attempt taking shape here. I wish my growth screens were giving me more to choose from in terms of actionable setups. Going forward, there may be some trading opportunities, but in terms of bona fide base breakouts, we're a little bit lacking in that area where even if we do see some follow-through in the market tomorrow, maybe Monday next week, Tuesday, Wednesday next week, there's not a whole lot of good bases to choose from out there. So that is why I am, just proceeding cautiously with my Ultimate Growth Stocks model portfolio. And if you want information about my newsletter, get a free trial, just go right on the homepage of TFNN.com and you can get information that way. You can click on the newsletters tab right along the top, then click on investment newsletters. All right. One day after reporting better than expected earnings, shares of Monsanto got an upgrade today from JP Morgan to overweight from neutral. Let's go ahead and take a look at a chart of Monsanto. Stock was benefiting on that news and actually has come back to life in spades here, up 6.6% today to $70.65. Again, Monsanto reported better than expected earnings on Wednesday. Fertilizer names, ag stocks like Monsanto have been hit pretty hard, but the numbers were pretty good yesterday from Monsanto. Quarterly profit actually lost 22 cents a share compared to a 9-cent loss in the year-ago quarter, but revenues up 15% year over year to just over $2.2 billion. Full year profit in fiscal 2012 for Monsanto expected to grow 17% compared to fiscal 2011, and then fiscal 2013 earnings up 15% to $3.92 a share compared to 2012. So decent numbers from Monsanto yesterday, and the stock gets an upgrade today from JP Morgan. Mentioned Apple. Let's just go back to Apple because again, this is a company. Wanted to finish up some thoughts here. That it is shares are down now about 0.5% to 376.21. Apple's going to be reporting earnings on or around October 18th. So coming up in 2 weeks or so. The consensus estimate is for profit of $7.17 a share. That's a 55% increase from a year ago, with sales up 43% to $29.16 billion. Stock, valuation-wise, 16 times trailing earnings, 13 times forward earnings. I've never understood, and I've never really been given a good reason why Apple sells at such a low multiple. You would think that with the growth that it has shown in recent years, it would get a little higher multiple compared to its peers, but it's still a cheap stock. That said, I still think it's vulnerable up here, and I think that investors should be careful. This low multiple, I think, is the market's way of saying that competition is going to continue to make its presence felt with Apple. And there's a fact that earnings and bottom line and top line growth in coming quarters is probably going to slow. It's going to be hard for the company to maintain the growth rates that they've shown in recent quarters. You're listening to Breakout Investing, folks. We'll be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 15th from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses, keep money in your community, and get a great education. But be sure to act now, because you only have till October 15th to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. Hi, folks. My name is Steve Rhodes, partner at Tiger Metal Exchange. When Tom O'Brien and I started Tiger Metal Exchange, it was with one mission in mind: to help you avoid getting ripped off when converting your jewelry to cash. If you're looking to convert your jewelry to cash, then log on to TigerMetalExchange.com. Take 30 seconds and request your free kit today. Get your free scale, get your free eye loop, and get the cash you deserve. We pay out 80% of the market price for gold. Our payouts are the highest in the industry. Our payouts are more than double our largest competitors, and we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. The Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone. Thanks for tuning in. My name is Ken Shreve. You're listening to Breakout Investing on TFNN. Let's go ahead and take a look at some movers during Thursday's session. Again, day 3 of a rally attempt for the major averages. Looks like 3 wins in a row will be the case by the close, but still waiting for some confirmation from the major averages in the form of another big percentage gain, similar to what we saw earlier in the week on Tuesday with a good surge in trading volume. That would be confirmation of a new uptrend. Let's go ahead and take a look at Priceline, a stock that has been beaten down hard. This is really a chart. Priceline is up 4.9% today. That's $21.75 to $467.42, trading up near its session high, but boy, has this stock been obliterated. Below its 50-day, below its 200-day moving average. Looks like kind of a V-shaped recovery here. This is exactly the type of stock that is not interesting to me right now. You know, you see a $21.75 point gain. There's not much volume in Priceline today. Looks like it's going to be about average. So really, to me, looks like a dead cat bounce. If Priceline goes on to form a base here, a proper base, fine, but it's going to have to do a lot more to prove itself before I'm interested in buying this stock. Let's go ahead and take a look at IBM. I don't really talk about IBM that much, but it is a company with a lot of positive qualities, and what you have here in IBM actually is a breakout. Now, unfortunately, it's a low volume breakout. It's trying to clear the 180.91 price level. That would be the high set about a week ago. Shares are up 2.6% today to 181.42. So it is above that swing point. This is a good base that started right over in this area. The stock corrected, say, from about $184 down to $157, started working its way higher, and now you have a breakout. The problem is there's not much volume in IBM at this point. Volume is still tracking below average, but you do have the stock clearing a swing point today of $180.91. The casino stocks in Macau bounced back nicely, but this is sort of a similar situation to Priceline. A technically damaged stock, which I consider Priceline. Take a look at shares of Wynn, up a whopping 10% today, $12.12 to $132.06, but it's still below its 200-day moving average. It's still below its 50-day moving average. You know, what you could have take shape and win is a double bottom pattern, where you have the start of the base here, the first leg down, it rallies back, gets to about the 160 price level, then another big whoosh down all the way down to $110 a share. Now it's working its way higher. Now, you could get a base breakout in Win, but it's going to take a lot more time, and believe it or not, the breakout is going to have to be over $160 a share for this to qualify as a legitimate breakout from a base. So Win is another stock that has a lot more work to prove itself before I'd be interested. Las Vegas Sands also does a lot of business in Macau off of mainland China. Stock is up as well, 4.3% today to $41.80. Slightly different technical appearance to Win, but same thing in that it's below its 50-day and 200-day moving average. So the casino stocks in Macau probably just rebounding from oversold conditions today, but I do not think either of these stocks, even though their fundamental picture is very, very strong. Remember, just recently we saw data out of a recent report out of Macau that showed gambling revenue grew 39% year over year for the month of September. So the gambling business in Macau is really showing no signs of letting up. There were some people thinking that if China's economy is going to slow down, you know, that's invariably going to impact the casino sales at companies like Wynn and LVS in Macau, but does not appear to be the case so far. All right, let's move on and take a look at Ralph Lauren, ticker RL. This is another growth name I've been watching. Stock's having a good day today, outperforming nicely, up about 6.25% to 141.19. Working on a 3-day winning streak. It traveled down to its 200-day moving average to right around 126 or so. Found support. Trading back up now to around $141 a share. But this is still a stock that's in the middle of a consolidation. I don't like buying stocks during these dead cat bounces. I still think there's some overhead supply for this stock to work through, and this is really the case. Some of the charts that we're looking at here, you can see why it's really not giving me a whole lot to work with outside of IBM. And I don't own IBM, but it is showing compelling technical action today. But again, the volume in IBM is on the light side, and typically when you see a stock take out a swing point, you want to see volume expand during that process, and just not seeing it in IBM. But in terms of Ralph Lauren, it is outperforming nicely today, 3 up days in a row, but the stock is still not at a buy point. All right, let's take a look at Deckers Outdoor, a name that I've talked about before on the show. And Deckers is another interesting stock here. It is trying to make a case that it wants to break out. The thing about Deckers is it's a very tough stock to handle, because it can move 8, 9, 10 points in one day, either to the upside or the downside. So it's easy to get shaken out. You've got a swing point that looks like it's in play here, would be right around $105 a share. Call it the high right in this area here. But I also saved a weekly chart of Deckers to show you, because we're looking at a daily. Now let's go over to the weekly of Deckers, and you're going to get a completely different perspective here. And what makes me nervous about Deckers is that it looks like a late-stage base to me. This is another major issue in the market right now that's just making me wary in general. Okay, first of all, very few good technical setups out there, and even some of the ones that I do see that could work, when I switch over and look at the weekly chart, I see stocks that have made incredible price moves over the past 2.5 years, really since the start of the bull market in March 2009. So Deckers is another example of a late-stage base where, if you're going to buy a breakout up here, this is just caveat emptor. Buyer beware. Don't be afraid to take quick profits. But it's hanging in there, doing pretty well today. Stock is up 4% to $101 a share. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stock placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make. Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, everyone. A nice little rally into the close here. About 5-6 minutes left to go in Thursday's session. We are definitely up near session highs at this point. The Dow now up 161 points, 1.5%. to 11,101. The Nasdaq up 41 points, 1.7% to 2501, and the S&P 500 up 18.5 points, 1.6% to 1162. So it looks like a finish near the highs. Again, day 3 of a rally attempt for the market. Not much volume behind the move today. Volume on the New York Stock Exchange and Nasdaq tracking about 10% lighter than Wednesday's levels, but really, again, the key is going to be tomorrow's jobs report. The estimate is for non-farm payrolls to increase by 60,000, with the unemployment rate holding steady at 9.1%. Let's take a look at a couple of other interesting setups here. I want to take a look at Cubist Pharmaceuticals. That's CBST on the Nasdaq. Interesting watching this setup take shape. Again, a big long base that started back in May and June, came down, corrected in price, has worked its way higher. Here you see the swing point right here of 37.62. Stock is up 2.2% today to 36.85, so less than $1 from that swing point. Cubist is a profitable drug maker, and let's get some information on Cubist, a very liquid stock with an average daily volume of about 1.2 million shares, market cap of 2.2 billion, but in an interesting technical setup that could work here. Bottom line and top line growth in recent quarters has been a bit erratic, which I don't love to see, but return on equity is high at 30%, and the company has made money. Annual earnings have been there for several years in a row. So possible breakout taking shape with Cubist Pharmaceuticals, ticker CBST on the Nasdaq. And let's also take a look at Questcor Pharmaceuticals, another drug maker that's looking interesting here. To me, this base has the look of a double bottom pattern. Start of the base right here. Stock comes down, works its way higher, comes down again. This low undercuts the prior low in the base. Questcor up nicely today, 6.2% to $31.14. The swing point here is $31.41, so it's getting pretty close to that swing point. Volume just okay, and again, this is low volume breakouts can work, but anytime a stock breaks through a swing point, you really do want to see volume as heavy as possible. Doesn't look to be too heavy in Questcor Pharmaceuticals today. Moving on, take a look at Intercontinental Exchange. ICE, love the ticker symbol, ICE on the New York Stock Exchange. Another base setting up here. So we just looked at 3 in a row, stocks that are in good bases that could attempt breakouts in the not-too-distant future. Intercontinental Exchange operates regulated futures exchanges, clearinghouses, and over-the-counter OTC markets for commodities and other derivative financial products. The shares of ICE were up close to 2% today to 125.52. The swing point here is 126.46. So another stock that's about $1 away from a swing point. Volume very, very light in Intercontinental Exchange today, so I would wait for volume to come into this stock before nibbling. But ICE has got pretty solid fundamentals, good track record of bottom line and top line growth in recent quarters, return on equity of 16%. So that's what's going on. Looks like a good close for the market today. Let's hope for a good non-farm payrolls report tomorrow. See more buyers come into this market. I'll be calling into Tom's show on Friday around 4:20 Eastern or so to talk more about this market. Thanks very much for listening, folks. Have a great afternoon. We'll talk to you tomorrow.